circular investment that's going on between these companies. And there was a really, really good graphic out. These companies have seemed to create kind of this money glitch. NVDA, which is at the center of the circle, is basically fueling all these other companies. And they made an investment into Intel, and then they make an investment into CoreWeave, and then CoreWeave makes an investment in somebody else. And they're all just kind of circling the same money between each other within this kind of circle of companies. And so the question is, this is all on the assumption that revenues actually show up at some point in the future.
It's also on the assumption that one of those bigger circles don't fail. Money going from one company to another, which is going to another company, and it's all kind of self-feeding itself. And it is a lot of money. The concern is that one of those big circles, OpenAI, CoreWeave, fails in some way. Monetarily, OpenAI is losing hundreds of billions of dollars. CoreWeave, I don't think, is making money yet. It's great that it's all self-funding and it's helping all those companies, but it's also creating a weak link for all of those companies in that circle. And that's both a benefit, but it introduces risks to many of those companies, some of which could be bankruptcy for the smaller circles, and some could be pretty bad earnings or much lowered expectations, which would show up in the stock price.
Well, I thought it was interesting. Yesterday, the CEO of CoreWeave did an interview with Jim Cramer, and Jim Cramer asked him about this circular investment that's going on with these companies. This is his quote: "The reality of the situation is really large. Really important technology companies across the space are buying infrastructure to deliver it to their clients. Meta, Microsoft, Amazon, Google. The largest tech companies in the world are purchasing this infrastructure because they have demand. There's nothing circular about that." Well, that's not really the case. They have some demand right now, but most of this is based on hopeful future demand. These data centers aren't even built yet. The power problem with these data centers, the data centers that Oracle is committed to build, is going to require 2.5 Hoover dams or 4 nuclear power plants. We don't have either one of those to deliver that power capacity. So what happens if we have a bottleneck on power? And this is probably more of a risk than a company like AMD failing. The fact that we try to build these things and yet there's not enough power to actually power them, and so we can't deliver the product at least on time. And so the revenue shortfalls become much larger than what these current expectations are.
When will they profit from all this investment? Will it be over the next few years, or will it be over the next 20 years? This is what caught up the fiber optic companies in the late 90s. They overbuilt. They got ahead of themselves, and the revenue just wasn't there. Where are they going to get this electricity from? And then the other question is, when will people revolt? Electricity prices are jumping, and it's because of AI. Jim Cramer's assumptions are very pie in the sky.
Catch me daily on The Real Investment Show. The link is in the description.